IRS certified at the basic and advanced level. And so usually during the tax season on Saturdays, we go to the Belmont Library and we fill out like tax returns for low income members of our community. So we are like pretty familiar with the tax process. And of course, we do that like under the guidance of a CPA and everything. But we are pretty familiar with the tax process. And yeah, we do have like some sense of credibility to be talking about this.
Yeah, so today we're going to share our experience with you and just some of the things that we've learned throughout this process. So first, why are taxes so important? So not only are taxes required by the law, but taxes that we pay to the government end up funding things like roads, healthcare, for some Americans, schools, airports, and other essential public services. Taxes also help produce economic stability. For example, governments use tax policies to influence economic behavior and to stabilize the economy. For example, tax incentives can encourage investment and also stimulate economic growth, while tax adjustments can help to us to manage inflation. So, what are taxes, and does anybody have any ideas as to why you should file your taxes even as a teenager?
Feel free to put these in the chat, and if you want to like private message us or put them in the public chat, either is fine.
Okay, so yeah, so filing taxes even as a teenager can be really beneficial because oftentimes you'll actually be getting a refund on any taxes that you paid when you had a job. But Rithika is going to get more into that in the next slide. But also just some other important information. Tax season usually begins around January 23rd, and the deadline for filing federal income tax returns is April 15th, 2024. So if you are interested in like filing your taxes as a teenager, you can obviously check with us. Also, maybe check with your local library also.
Yeah, so here I'm going to get into some of the benefits of filing your taxes. First of all, many teenagers don't file their taxes because they're not legally required. Usually, if you're making like below that 12,000, 13,000 range, you're not obligated to file taxes, and most teenagers work part-time, so they don't file them. But actually, if teenagers were to file their taxes, they wouldn't have to pay state or federal taxes, and they would likely get a refund on any taxes the employer withheld, as well as they could possibly get tax credits. Also, I really apologize for my voice. I'm a little bit under the weather, but after you like file your taxes, you're also able to contribute some of those returns to a Roth IRA, which could set you up for your retirement very well. It's something that we went over during our first workshop. And also, a lot of teenagers maybe see taxes as like a daunting task because they aren't really familiar with it. But something like a simple tax return with like maybe one job and one W-2 and like one set of forms, which we'll be going over in future slides, would probably take like less than an hour. It might even take like 30 minutes. So it's not a super daunting task at all. And a lot of my friends that have done it have gotten a lot of their like money back that they didn't even know they could get back. So it's definitely a great option to consider.
So I know that Rithika just talked about W-2, which is a version of an income form. So here's some of the income form's purposes to provide quantitative information regarding your annual wages and also the taxes that were withheld from your paycheck. So these are mandatory that the employer sends you this W-2 to the employee and also to the IRS. And it is used to file both federal and state taxes. So a fun fact is that the penalty for disregarding filing a document such as a W-2 in 2023 is $630. So that's why it's really important. And anybody who was an employee and made at least $600 during the year will receive a W-2. Now, 1099-R, there are a few different versions of this.
without
For
FICA.
example, there could be, for example, a 1099 div, which is for dividend income, 1099 INT for interest income, and many others. So these are more for like professionals who are like self-employed, for example, or contractors who do not receive a W-2, or for other like forms of like, for example, passive income, because they are not employed by directly an employer. So it's kind of like a way for the IRS to keep track of their income and know what they made and how much they made, and figure out how much they were taxed or how much they need to get taxed. Um, an individual who receives a 1099-R, they get this when they receive $600 or more in non-employee compensation. So, can anyone think of a situation? I kind of talked about this, but can anyone think of a situation where an individual would receive a 1099 document form? Okay, so yeah, so an example that I saw some examples that I did talk about, but an example I didn't talk about is a 1099-R. So this is a variant of the 1099 form that is for reporting any income on distributions of like pensions or retirement plans, such as Roth IRAs. So now let's talk a little about tax brackets and how the government decides like how much to tax you based on a few factors. So the US has a progressive tax system where portions of a person's taxable income can fall into different brackets to be taxed at different rates. The tax brackets are usually adjusted each year just to account for inflation so that it can help prevent you from paying higher taxes as the cost of living increases. So, for example, states may handle taxes differently than the federal government. Your state might have a different tax bracket, or it might altogether use a different system. Like for example, in Colorado, it levies a flat tax income of 4.4% on taxable income, but other states such as like Wyoming don't levy a state income tax at all. So, your tax brackets are influenced by your filing status. For example, like if you're single, married filing jointly, head of household, married filing separately, or like recently widowed. So that's why it's really important to figure out the best filing status for you so that you can get the highest deduction. And also, it's also important to note that when you are getting taxed, like when your tax bracket is like 37%, not all 37% of your income is getting taxed at that rate. So as you can see this little chart right here, first they have like their deduction, so that's not getting taxed at all. And then there's different rates for like different amounts. So yeah.
Okay, so just as Linda mentioned, now we're going to go into deductions and how they work. So first of all, deductions just lower the amount of taxes you owe. You could just see them as like deducting. And there's a ton of different types of deductions, and so you can claim whichever like reduce your tax bill the most and whichever ones are just most applicable to your situation. So a couple of examples are tax savings for teachers. So a lot of teachers do their own like personal expenditures for their classrooms. So that would count for teachers. Charitable gifts in general, like charitable contributions, are like deductible, as well as like paying for babysitters and whatnot. So there's two different types of deductions, itemized deductions versus standard deductions. So first of all, itemized reductions also reduce AGI, which is adjusted gross income, and deductions exclusively for those who itemize would be like gambling loss deductions, home mortgage interest, unreimbursed medical or dental expenses, and need receipts of expenses. Whereas in contrast, standard deductions are more like a fixed dollar account, and they're according to your filing status. So maybe if you file Like, so there's a lot of different filing statuses. You might be single, you might be married, filing jointly. And so standard deductions would be according to that and just your like personal situation and what the government would want to like sort of give back to you.
Sorry. Let's do a practice problem. Let's say a taxpayer is filing as single and their adjusted gross income is $40,000. And they also have itemized deductions of $14,000. What would you recommend for them to do to itemize deductions or take that standard deduction for the single? Or just type, feel free to like private message it to one of us. Okay, yeah. So in this situation, we'd probably recommend the taxpayer to itemize the deductions because with itemizing the deductions, the taxable income is reduced to $26,000. That's just 40,000 minus 14,000. But if you elected to use a standard deduction, you would only reduce 13,850 just because that's the deduction for one that is filing single status. So that makes their taxable income 26,150. So in this example, you should probably opt to itemize your deductions, but just moving forward, like it's really important just to like consider your own circumstances and just see which one would be better for you. But the majority of people usually opt to take the standard deduction. So filing taxes as a student. So there are two different types of education credits that the IRS offers. So the first one is the American Opportunity Credit. So this is for qualified expenses such as tuition, any sort of things that are necessary for you to attend the college. So like for example, if you are required to buy a book for a class, that would count as a qualified expense. And it also counts only on the first 4 years of a higher education. So it can't be claimed, like, for example, if you continue on to get like a master's degree or something, you can't continue claiming that credit. But the max annual credit for that is $2,500 per student, and it's refundable. And also, it's really important that you have some sort of tuition statement just to kind of prove that, oh, I was paying that tuition, I was paying that expense. And that statement is usually like reported on the 1098-T. So yeah, so also some other things that you have to do in order to qualify for this is you have to be enrolled at least half time for at least one academic period beginning in the tax year. So that's just to ensure that, oh, like if you're just like working and taking maybe like one college class, or like if you're not really like enrolled the full time, then you can't claim that credit. So also you can't have like a felony drug conviction at the end of the tax year. And yeah, so then there's also the lifetime learning tax credit, and this can be continued to be claimed like even if you're working and for example you're taking a class at a community college or taking a class that's to like better your professional self. So this is for graduate, undergraduate, and professional degree courses. So once again, you also need your tuition statement, but this is not refundable and it's up to a $2,000 deduction. So the amount of credit for this one is how they calculate like what your deduction is. The amount of credit is 20% on the first $10,000 of qualified expenses for a maximum of $2,000 per refund. So it is not refundable. So that means you can use the credit to pay any tax that you owe, but you won't be able to receive any of that credit back as like a refund. So you won't be like getting that $2,000 directly back into your pockets. You could just use it to pay for any taxes that you may owe. So just some other general information, you can't claim both of these taxes in the same year. So you have to figure out which one would be most beneficial for you. And then you can include the cost of, like I said, tuition fees, any book supplies, or any other required purchases directly from the school. so long as it's a condition of your enrollment in that university.
Okay, so now just getting into who can claim these credits. This depends on your own situation. So if you're a dependent on somebody else's tax returns and maybe they're like paying for your college and whatnot, then the like person who's dependent you're for would be able to claim these returns. So for a lot of us, that might like be our parents or guardians. Otherwise, if you're not claimed as a dependent on someone else's tax returns, meaning that like you're providing for yourself and you know, you're the one kind of paying for your tuition and everything, then you can claim these benefits or claim these credits to benefit your own tax return.
So, why should you care? So, what we talked about earlier is that you, as a team, you can just get money back. So, right now, if you're not filing for taxes, you're basically just allowing the government to have that money that was taken from you, deducted from your paycheck. So, you can get all that money back from your paycheck that was deducted, which can be a lot. And also, one thing to note, it does not matter if your parent claims you as a dependent, you can still file and get that money back, get that refund.
Okay, so given that that was a lot of content, we're gonna be getting into like some taxes and fun facts. I know for like futures, for future like fun facts, there'll be like some guessing answers. So feel free to put that in the public chat instead of the private chat, so you guys can all like compare your guesses. But the first fun fact is that actually the highest tax rate in US history was in 1944 when taxpayers that made over $200,000 annually paid an income tax rate of 94% on their taxable income to the IRS. And $200,000 then, of course, is worth a little bit more than it is now, but 94% of their taxable income is kind of a lot compared to what we're used to now. So that's just some like food for thought. Um, but for those of us in school, we might be familiar with the Boston Tea Party. And so just to start off, does anyone remember what tax led to the famous Boston Tea Party? Okay, I got a couple of answers referencing tea. It was partially tea. It was also a product of the Stamp Act, which meant extra taxes for colonists on paper, on glass, on tea, on certain food, on pretty much all like printed products, all of that. And so in response, colonists dumped 2 million pounds of tea into the harbor. And so that's like one of the first like major instances of like tax revolt and like boycotting. Secondly, try guessing how long taxes have existed for. Okay, so I got 20 years, I got 45 years, I got 400 years, I got 145. The correct answer is actually 5,000 years. They've existed for a very long time. Michael actually got that right. I just saw that. But yeah, taxes have existed for a long time in different forms, and it's a pretty, I guess it's a pretty significant aspect of society for a long time. Finally, guess how much total the IRS makes from taxes in 1 year. So like not in total ever, but just on a 1 year basis. Okay, I got 150 million, I got 300 million, and I got 750 million. The actual answer in 2023 was $4.7 trillion dollars. So I guess that's accumulation of, I guess our population in the US is about like 337 million. So yeah, in total the IRS earns about 4.7 million or trillion dollars in revenue. And on a per like $100 basis, it usually costs them about 11 cents to earn that $100. So you could do the math, but they do generate a lot of revenue from taxes in order to, of course, like run the nation and everything. Okay, so now looking ahead before we like finish up with taxes. So scholarships and grants. So our like final workshop next week was going to be about investing and everything, but our final workshop after that will probably relate to scholarships and grants. Um but scholarships and grants are unique because they're not like loans where you have to pay them back for colleges and whatnot. And so right now, between January and April is kind of a good time to be applying for scholarships and grants if you're already applying to college. So consider looking into that. Secondly, getting a job after you turn 16, you're kind of eligible to work. You just have to kind of get like a work permit from your school, which isn't like too difficult of a process or anything. And like I said, because you're likely working part-time along with maybe school, um, you're likely to be able to get tax returns like we talked about. You really only need like your social security number, your W-2, which we went over, and it'll probably be like 45 minutes maybe to file your tax return, and you'll probably get money back, which is a really good feeling. Also, moving forward after college, so a lot of colleges now have like need-based college admissions. So please, like consider that as an option. Like for instance, even a lot of the elite colleges that maybe weren't as much of an option for certain people like in the past, they have need-based college admissions and they're blind to like financial need during the admissions process. And also there's a lot of different like college options. You're not kind of stuck in like this whole like 4 year program if you don't want to be. You could go to a 4 year college, whether that be like a public university, in state, out of state, or like a private university. You could go to a UC versus like a state university. State universities tend to be a lot less expensive than the UCs. You could also go to community college for 2 years. um, I know a lot of people end up going and then transferring, and also trade or vocational training or schools is also um, another really good option. but we will probably get into this in our last workshop. So this was just kind of like a preview before we get back into taxes. So,
Okay, so
oh,
how do you file for taxes? So just kind of like you might be wondering like, oh, I've had a job and I really want to like file now because I want to like get some money back. Actually, I know one of my friends was able to get like over 800 to $1,000 back on her tax return just from having like a part-time job over the summer. So in order to qualify for free tax preparation, your adjusted gross income has to be less than $73,000. And also there are a lot of like other tax firms such as TurboTax that will do your taxes for free if you qualify. Like so if your adjusted gross income is low enough. And then there's also some volunteer run programs like the VITA program at the Belmont Library that we talked about. And then Rithika also talked about this, but the documents that you need to do to file for taxes, you just need your social security number, any relevant information such as like your birth date, your address, all that. And then you also need some sort of form that shows your income, like how we talked about. This could be a W-2 or a 1099. Okay, so now I know we kind of like covered a lot of content that was pretty content heavy. So if you guys have any questions, feel free to put them in the chat and we'll answer them. You can just private message any one of us or put it in the public chat. Okay, so somebody asked what the difference is between a tax credit and a tax deduction. So a tax deduction usually just reduces your taxable income, while a tax credit directly reduces the amount of taxes that you owe. So credits are usually more beneficial because they provide a dollar for dollar reduction in your tax liability, whereas tax deductions simply just reduce your taxable income. So that little portion of the income that is deducted, you can't like owe taxes on that.
so I got a question saying, is there any point in filing taxes as a teen if you are self-employed or working an informal job which doesn't deduct income tax? Okay, so the answer is that if you're like employed like legally, then there is a benefit because you should be able to get, like tax returns. I will say that if you're working an informal job, for instance, a lot of people like, maybe they'll like earn revenue like, oh, babysitting, or like a lot of like contractors or gardeners or like coaches and stuff like for private lessons. They don't put that like income on their like tax returns or to like file it for taxes. But that's also like a little bit illegal. You're not supposed to do that. So if if you are working an informal job and like getting money from it, you're still supposed to put that on your taxes. And if you're a teen and it's not like, over that like 12,000, 13,000 range, then I mean, this question mentions that the informal job doesn't deduct income tax, which I haven't like been exposed to. I don't know if that's like legal or not, or if that's common or not. I personally haven't heard that before, and so I would say that you should probably double check because they probably are deducting income tax, and then you could probably just file your taxes and then get a lot of that back. So yeah, please keep that in mind because most likely they are deducting income tax, and most likely if you're a teenager, then you will get money back from the IRS as long as it's like Linda said, below that 13,850 range.
Yeah, so for example, let's just say you're like working as a babysitter and they're not deducting like any taxes from your money. Maybe they're paying you in cash or anything. You don't have to file taxes unless you're making more than $13,850. So, like for example, if you're having that babysitting job and you do file taxes, it's not really like worth anything because they're not going to be able to deduct anything from you, like take anything from you, but they're also not going to really be able to give you a refund, right? Because you weren't having anything deducted from your paycheck. And okay, got one more question. What is the difference between federal and state income tax? So we kind of talked about this a little bit, but federal income tax is imposed by the government, while state income tax is imposed by like the individual state government. So both taxes are based on your income, but there are maybe different like rules and rates for different states.
Yeah, so just to add on, like for instance, a state like Texas doesn't have any income tax, but they have pretty high property tax. Excuse me, whereas like a state like California has pretty high income tax. So it definitely does vary a lot like over state, but the federal one is like for the whole country, and so that's like a separate tax. A second question I got was regarding like where you can get your W-2 from. So your W-2, you should just be able to get that from your employer. A lot of the times, like if you're paid on like a 2-week basis, you can get it like from them at that time. And the W-2 itself like isn't a pretty complicated form. Like there's only a couple of boxes and it just shows like, oh, your name, your employer's name, and like they're both, both their like IDs and like how much money you earned. So it's not super complex or anything like that either. Okay, if there aren't any more questions, thank you guys all for coming and see you next time. Our next meeting is going to be about investing, which is, I guess, like our most exciting topic. So please stay tuned for that. And if you're not like familiar with investing, it's okay. We'll start with the basics, but we'll also get into some very like I guess, interesting stuff. So please stay tuned. Here's our Instagram and our YouTube. So our YouTube has all of the recordings of these workshops in case you missed them. So you're welcome to view them there. And if you have any questions, please just reach out to us. And yeah, thank you guys all for coming.